Hi traders, you are welcome to my video on the ICT Pullback Strategy. Okay, so in this video, we're going to be showing you how you can apply the ICT Pullback Strategy to your trading and how to identify high probability setups. First of all, we need to understand what a pullback really is. Okay, so now this is a bearish trend, right? Lower highs and lower lows is what form a bearish trend. So now, what is a pullback? A pullback is simply a retracement in price that happens after an impulsive move. So in a bearish trend, you have an impulsive move is the one that goes in the direction of the bearish trend. A pullback is the one that goes against the trend. Then you have an impulsive move and then you have a pullback, right? An impulsive move, you have a pullback, have an impulsive move, you have a pullback. So pullbacks are usually against the trend. Okay, these retracements or pullbacks allow traders to enter at better prices instead of chasing impulsive moves. Okay, price rarely moves in a straight line. Instead, it moves in waves. Okay, so the ICT pullback strategy is designed to help you recognize where these retracements are most likely to occur based on institutional concepts. Now, why do pullbacks happen? Institutions and large players rarely place their entire orders at once. Okay, they often need price to retrace back into areas of interest, such as liquidity pools, order blocks, or fair value gaps. So they can accumulate more positions, before the next move begins. So this is why instead of buying or selling after a large move, it is often smarter to wait for price to come back to these zones, right? So now, the first step in the ICT pullback strategy is identifying market structure. Is the market bullish or bearish? So in an uptrend, like what we have here, in an uptrend, you want to see displacement to the upside, followed by a pullback into a discount level. All right. Okay. So once you have a pullback into it, after your pullback has been confirmed, you look for long opportunities. That's in a bullish trend. So now in a downtrend, you wait for displacement to the downside, then a pullback into a premium level before considering shorts. Structure gives you the framework. The second step is looking for displacement. Okay, displacement occurs when price makes an impulsive move that creates an imbalance or fair value gap in the market. For example, you can see how this impulsive move created an imbalance. You can see there's a fair value gap here, right? You can see this impulsive move. You can see there's a fair value gap here. So these gaps are footprints left by institutional orders. Price often retraces to these zones to fill in the imbalance before resuming its original direction. So identifying displacement is key to finding where the pullback is likely to end. The next is to focus on liquidity. Pullbacks often target liquidity resting above or below recent highs and lows. For example, in an uptrend, price may pull back below equal lows to grab liquidity before moving higher again. So understanding how liquidity drives price is essential for applying the ICT pullback strategy correctly. Another important element is patience. Many traders struggle because they enter too early or too late. With the ICT pullback strategy, you are waiting for price to return to premium or discount levels. This discipline ensures that you are aligning your entries with institutional order flow instead of emotional impulses. All right. The ICT pullback strategy is also versatile. So whether you trade Forex, indices, or commodities, the principles remain the same. Market structure, displacement, liquidity, and retracements happen in all markets and on multiple time frames. All right. So that means you can adapt the strategy to fit your style. Whether you prefer intraday trading or higher time frames, you can still take advantage of this strategy. All right. Now, to recap, the ICT pullback strategy focuses on identifying market structure. That's one. Secondly, waiting for displacement. Thirdly, watching for liquidity grabs. And finally, executing entries at premium or discount levels. Okay, so by applying these steps consistently, you'll be able to approach the market with more confidence and discipline. And mind you, risk management is non-negotiable. Okay, you must employ proper risk management if you want to be profitable. All right, you should not risk more than you can afford to lose. You should not risk more than 1 to 2% of your account balance. Well, that depends on your risk tolerance though, but following a conservative approach, because no strategy guarantees profit. So you want to use small percentage of your account per trade. You want to risk only a small percentage of your account per trade. All right. So by applying all these steps consistently, you'll be able to approach the market with more confidence and more discipline. Now, if you found this breakdown of the ICT pullback strategy helpful, make sure to click the like button and subscribe to the channel for more in-depth trading content. This way, you won't miss future videos where we dive deeper into ICT concepts, strategies, and other important trading advice and education. Thank you for watching, and I'll see you in the next video. Happy trading.